Google investors looking for updates on AI and growth for cloud computing. Our next guest covers both of the names and also has a buy rating on both. He's Brent Thill of Jefferies. Brent, welcome. Good to have you back. Let's start with Microsoft. What are you looking for there? What are the key numbers we should pay attention to?
Yeah, the key for Microsoft is really closing out their fiscally strong Q4, growth of Azure Office, and most importantly, the AI impact. They launched pricing a week ago that kind of blew everyone away in terms of the price lift, between a 50 and 100% price lift per seat, per user. So when is the AI rollout going to have an impact? There'll be a lot of attention on that. I think there'll be a lot of attention on, the pricing. Everyone has said that that was way higher at $30 per user per month. Why did they feel confident in pricing at that level?
What do you think?
The overall AI
what do you
impact,
think? Is it too aggressive, or what do you feel?
I felt like it was too aggressive out of the gate. Remember, enterprises are going to get discounts. They'll get it bundled in when they sign a larger enterprise license agreement with Microsoft. So I think initially on paper it looked really aggressive, but I think this goes back to Microsoft's view and the value that they're creating in this platform. It's not generally available, so you can't talk to a lot of customers to see, hey, like, do you think it's worth it? But I think everyone in the industry we talked to in the last week is like, that was way ahead of expectation. If they can pull it off, again, this is why we're so bullish on Microsoft. If they can get customers to pay for this, it's a massive revenue and earnings accretion story. The offset of this is the expense structure. Everyone is freaked out that they're going to have to guide way higher on expense. Ultimately, I think they get a hall pass as long as the revenue's there. They can guide to where they want on the expense structure. So CapEx and OpEx, I think the street's a lot higher than where published analysts are at now, bracing for an AI investment wave. Again, most of these products are not even generally available, so you have to plan and put in the infrastructure to get it sold.
Yeah, so in balancing investment versus actual monetization of these new AI capabilities, I could ask the same question about Alphabet as well, since these two are very much in an AI arms race against each other.
Yeah, a little different here, really about the state of the ad market rather than the enterprise demand market, where Google's most of its revenue is tied to advertisers. Again, the checks have been, advertisers felt better. The writer strike's helping YouTube. We continue to see good momentum around their AI platform. We don't believe the consumers are running to Bing. They're staying with Google. That's good for advertisers. They want to spend money where the users are. So overall, things are improving. They should accelerate revenue growth. And again, AI is a story here, but it's probably a little more murky. So everyone's going to ask a little more questions about directionally where they're going, when they can monetize it. They have not been as loud and as convicted as Microsoft. So more clarity there on that front will be needed. Stock's still cheap. We think, again, the simple thesis in AI, Microsoft will win the enterprise, Google will win the consumer. There's room for both are buys in our book.